GameStop short squeeze rebellion continues.
This isn't just the traditional kind of pump and dump.
GameStop's rally has really been driven by a frenzy of traders on social media.
We like the stock. We like the stock.
I don't care about what my financial return is. Now it's about sticking it to the man.
You're not going to change the story. You're not going to change the underlying fundamentals of this company.
You do not short a stock with 138% short interest.
And the bigger question is, when does it end? I don't think it ends soon, but I think it will end, and it will end very badly for the public.
Many think it's a foolish investment, but everyone's wrong. It's like the Big Short again. Or more like the Big Short squeeze this time, right?
By now you've probably heard about GameStop, how its stock surged 2,000% in a matter of weeks, and the absolute freak out that it's caused on Wall Street.
Hey, stop! Why?
This is monumental. It has the potential to change how people invest, at the very least in the short term, but quite possibly forever. This story begins with WallStreetBets, a subreddit full of, and I say this lovingly, absolute degenerates who can help you turn a $10,000 investment into 10 cents. Prior to 2021, outside of its community, this subreddit was best known for being obscene language using, dank meme creating YOLO traders who would sometimes win big, but more often than not lose everything. And so it was in this community in late 2019 that a Redditor that I'll call DFV made a now infamous post outlining an investment thesis on GameStop.
GameStop is one of the most compelling asymmetric opportunities in the market today.
In it, he argued that GameStop was undervalued and had been misjudged by many people in the investment world.
It's like the Big Short again, or more like the Big Short squeeze this time, right?
His fellow Redditors thought it was genius.
At last, I am surrounded by people who get me. People who understand me and people who think like me.
For those who don't know, GameStop is a brick and mortar business that sells video games. Here in Australia, we might know them better as EB Games. And over the last decade, they haven't done very well. See, consumers are choosing to buy digital copies of games directly through their consoles, or just to get them at far cheaper prices by going through a massive retail outlet online, like, say, Amazon. As such, GameStop went from being a business that was profitable 10 years ago to losing money in 2019 and 2020. It was for this reason that the big boys of Wall Street thought they could make a quick buck by betting against it.
I've made a severe and continuous lapse in my judgment.
Oops, did I say bet? This isn't gambling. This is institutional investing. Only degenerates gamble. What I meant to say was selling shorts.
Got my Saturday shorts on a Saturday night. Got my Saturday shorts on and I'm feeling alright.
Here's how it works. Let's say you've just bought the latest iPhone, but before you even get a chance to open it, I tell you I'm gonna borrow it. But don't worry, it's cool. I make a promise that I'll give it back to you. So naturally, later that night, I go and sell it for $900. Know what I've just done? I just shorted your phone. But crap, I did make a promise to you that I would give it back. And you've got a reputation for taking a baseball bat to people's knees when they don't return your stuff. So, how am I going to get this phone back to you? I could go down to Apple and buy you a new phone, but like, they're selling them for $1,000. That would mean a $100 loss for me. Nah, we ain't having that. So instead, I just start bad-mouthing this phone. I tell anyone who'll listen about how much it sucks. And eventually, I manage to convince old mate down the road that his brand new iPhone is a hunk of crap.
Okay.
Naturally, he goes and tells all of his mates, who then go and tell all of their mates. By the end of the day, no one wants his phone anymore, so its price comes down. And that's when I waltz back into Apple, cash in hand, and buy that phone $800. You get your phone back, I keep my kneecaps, and most importantly, I've made $100 of pure profit. Now just replace the word phone with shares, and you've got short selling. You take something that doesn't belong to you, and just replace it at a later date. Fingers crossed at a lower cost. If you pull that off, pure profit. Now, I know what you must be thinking. That seems super risky and quite irresponsible. I mean, what happens if the stock price doesn't go down but goes up instead? To that, I say, shut up, nerd. That never happens, especially on a stock like GameStop. It's a bad business and it has to go down. Shorting this stock literally cannot go tits up. Want proof? Ask my boys at Melvin Capital and Citron Research. They have shorted this stock heavily and they're about to make bank. Sorry, what's that? They what? Oh.
For what I bet, yeah, it's a little bit more than I wanted to lose.
So how did we get here? Let's return to the story of DFB. Throughout 2020, he continued to argue his case that GameStop was undervalued.
Still in 2020, GameStop maintains a healthy market share within the gaming industry. It's the only major brick-and-mortar retailer dedicated to gaming, and a recent survey indicated that over 25% of people buy their new games at GameStop, and 40% of people buy their used games there.
He believed it had a decent amount of cash on hand, was pivoting to online retail, and was growing less unprofitable with each passing quarter. Still though, his esteemed colleagues politely disagreed.
Can you go? You're making me very uncomfortable. Please leave. Please leave.
But then in late 2020, GameStop's stock started to rise. Slowly, but it was rising. And other Redditors started to pay attention. You smell that, boys? Someone's cooking tendies. Maybe unlike so many other users in this subreddit, this guy was actually onto something. In mid-January, it popped. GameStop stock was up 60% in a single day. Obviously, for the big firms that had shorted GameStop, this was bad news.
That is not good.
Remember, short selling means that they've borrowed the stock and have already sold it. They have an obligation to return that stock, however, which means eventually they're going to have to buy it. Now, they thought they could buy it back at a lower cost and pocket the difference. But oh dear.
Hello.
Plan has gone awry. The price of GameStop is much, much higher than they're willing to pay for it. Whoops. Realizing that they could potentially lose a metric ton of cash, these traditional investors and short sellers began to rail against GameStop. They started a scare campaign. They tried to convince retail investors, ordinary people like you and me, to sell their positions.
Me personally, who is short the stock, I have no problem selling the stock higher. You're not going to change the story. You're not going to change the underlying fundamentals of this company.
In doing so, they were trying to reduce GameStop's share price and, in the process, their losses. Probably would have worked too, had it not been for one fatal error in their calculation. They'd underestimated their enemy. See, WallStreetBets were used to losses. They hadn't merely adapted the dark, they were born in it. Every time one of their own hadn't calculated the risks, they'd paid the price. There was Irony Man, who lost $60,000 in box spreads, not long after boasting it literally cannot go tits up. Or what about Anal Farmer 2, who made $700,000 only to lose it again a few weeks later? And of course, who could forget Control the Narrative, who used the infinite money glitch on RobinHood,
similar to a sort of video game hack,
to put $50,000 on Apple puts days before an earnings report, only to then lose 25 times his entire account live on stream while the world watched his soul leave his body. If they'd all had to pay the price, wasn't it only fair that the big firms and hedge funds did too? The Redditors realised that GameStop was primed for a short squeeze, and all they had to do was like the stock and buy it.
It's free real estate.
See, at the time, GameStop was the most shorted stock on the US market, and so if its price increased enough, brokerages would want their stock back, and the short sellers would be forced to buy it to cover their positions. And with the sheer volume of short positions, there was going to be a lot of buying. This would create a feedback loop, as other shorts would have to exit their positions by buying back as well. Throw even more fuel to the fire with a surge of retail investors wanting a piece of the action.
Let me in! Let me in!
And suddenly you've got a share price that is skyrocketing. Like I said, all WallStreetBets had to do was like the stock and buy it. Or so they thought.
Sometimes foreshadowing is relatively obvious.
In just a matter of weeks, GameStop stock was up almost 2,000%. And as a result, the big firms and hedge funds of Wall Street were facing some big losses. Melvin Capital was on the brink of bankruptcy and had to get a $3 billion bailout from another huge investment company just to stay afloat. Meanwhile, over on WallStreetBets, it's the complete opposite.
Cheers, everybody!
DFB's investment alone went from being worth $50,000 to almost $50 million at GameStop's peak.
Nice.
But he didn't sell, at least the vast majority of his position anyway. Even as I sit here and record this, it's believed he still hasn't. Many other Redditors either didn't or haven't yet either, despite sitting on potentially life-changing money.
I'm kind of retarded.
Because by now, this had become about more than the money. It was about more than impressing their wife's boyfriend.
My wife's boyfriend bought me a Nintendo Switch Lite.
This was officially a battle between ordinary people and the bigwigs of Wall Street. At least, that's what the narrative had become anyway.
This isn't just the traditional kind of pump and dump, which I feel like a lot of people on your network are characterizing it as. I think it's a much broader socioeconomic movement.
At this point, like I said, I don't care about what my financial return is. Now it's about sticking it to the man.
For a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk and they left retail as the bag holder. And a lot of these kids were in grade school and high school when that happened. They lost their homes, their parents lost their jobs, and they've always wondered, why did those folks get bailed out for taking enormous amounts of risk and nobody showed up to help my family?
The 2008 global financial crisis was devastating. People lost their jobs, their homes, and their lives. And while they were losing everything, they had to watch as the banks and institutions that had leveraged the economy and caused the collapse suffered no consequences. Those scars run deep. And so when news broke that by buying GameStop, they could potentially hurt those same institutions, people got excited. They saw this as their one opportunity to finally screw them back.
Don't do it. No, don't do it. I'm a virgin.
And as we've already discussed, for a little while there, it actually worked. But then on Thursday, January 28th, the game done changed. The popular brokerage service RobinHood prevented its users from being able to buy new shares in GameStop.
And it's gone.
What?
It's gone. It's all gone.
Several other brokerages put similar restrictions on their own platforms. The buying pressure that had been building for a week died off almost instantly.
He's already dead.
It seemed the bubble had burst. The squeeze had squoze. And GameStop's share price made its descent back down into the realms of reality.
Well, what an awful thing to see. But we're here to learn, so we'll move on.
For those that had ridden the wave up to life-changing money, only to refuse to sell at GameStop's peak, well, they were back at square one. For those that had gotten in too late, it was a lot worse. For anyone that had bought in at $200, $300, dare I say $400 a share, they were reporting losses ranging from a few $1,000s to a few $100,000.
My day is ruined.
Which brings us to the present. WallStreetBets is divided. There are many who believe that the whole ordeal with GameStop is over. That the short squeeze has already happened and anyone that's still holding shares in GameStop lost.
It's over. Go home.
Now, obviously those that are still holding shares have a different opinion.
You're not an intellectual. You're a fake and a fraud.
They're arguing that the real short squeeze hasn't happened yet.
We're not leaving.
They're boasting about their diamond hands.
We're not leaving.
And encouraging each other to hold the line.
We're not fucking leaving!
And they didn't. Hi, I'm Seb from the future. You can tell because I haven't had a haircut. So, a quick update before we continue. GameStop is up. Again. And so there's no longer much division on WallStreetBets. Instead, it's gone back to being a place where people mostly shout at each other about how GameStop can only go up. See, it's different this time because of Electric Boogaloo. At this point, I have no idea when this story is going to be finished. In fact, I'm starting to think that George might be writing it.
I want to finish it, and I still have 2 more books to do.
Instead, we're going to shift gears and talk about what this means for the future of investing. Because the implications, they are what, Lana?
So big.
First of all, let's talk about what this means for GameStop itself. The fact that its stock price rose by so much, and even now sits at a considerably higher price than what it was only a few months ago, can actually help the business. Smell that? Seems the boys made enough tendies to share. Whether they intended to or not, these Redditors have given GameStop the potential for a huge cash injection.
My veins!
See, when a company needs cash in a hurry, they essentially have 3 ways of getting it. Let's say I'm GameStop. Why? Because it's my video, and I'll shoehorn myself in wherever I damn well please, and you can't GameStop me. The first option is to sell off a bunch of equipment or land. Hey there lads, operating plant for sale, hardly ever used. $1.6 million or newest offer. Call 1-800-69-69-420. Serious offers only. Any jokers will be hung up on immediately. This isn't really a great option though, because I probably need that land or equipment to help make or distribute the product that I'm selling. Another option is to take on debt. I could head on down to the local bank branch and ask old mate for another $10 million. He knows I'm good for it. Again though, depending on what I'm wanting to spend the money on, this isn't really ideal. It could very easily scare off potentially new or currently existing shareholders.
No, I would probably not choose to do that publicly here.
Which brings us to our last option. I could sell myself. I know people want it. The only problem is that 100% of me is already owned. But what I could do is make more of me. Did I just make this analogy really gross? Gross analogies aside, in the investment world, this is known as issuing new shares. Basically, a company creates new shares to sell to the public to get their hands on some quick cash. It's not done very often though, because to create new shares means diluting existing shareholders. Basically, everyone ends up owning a smaller piece of the pie. So typically, investors really only want companies to do this when the return is going to be worth it and the share price is overvalued. How do they know when the share price is overvalued? I would say that a 2000% increase in the share price in just a matter of weeks probably qualifies. If GameStop wanted to do this, even with the share price crashing back down to earth, they could make serious bank. This is actually what another company that WallStreetBets rallied behind did. In a similar way to GameStop, the Redditors helped to inflate the share price of American multi-cinema. Off the back of that surging share price, AMC issued 44 million new shares and used the cash from those shares to pay off $600 million of debt. The actions of WallStreetBets has created a real opportunity, not just for GameStop, but others as well, to make some easy capital to continue to grow and expand their businesses. It's the first time outside of maybe Tesla that I've ever seen retail investors be able to affect the future of a business in this way. Now, more broadly, I think what's happened here with GameStop has changed the psychology of the market. Short selling, at least for the moment, can no longer be seen as a way to make a quick or easy buck. The message has been sent. If you're going to bet heavily against the future of a company, don't be surprised if it turns around and bites you on the ass. Because while you might think that company's a bad business, these guys, they like the stock.
As for me, I like the stock.
Case in point, a bit earlier in this video, I played you a clip of a defiant Andrew Left from Citron Research. They were one of the firms that had a pretty hefty short position in GameStop. Here it is again, just to jog your memory.
Me personally, who is short the stock, I have no problem selling the stock higher. You're not going to change the story. You're not going to change the underlying fundamentals of this company.
Well, cue the curb your enthusiasm. Well, cue the curb your enthusiasm. Why can't I say that? Enthusiasm. Well, cue the curb your enthusiasm theme, because only 1 week later, Citron announced it would be shutting down its short-selling research department. Is that not an admission that in the current market, selling shorts is no longer viable?
There ain't no shorts, and there never was.
One of the bigger things to come out of this whole GameStop saga, at least in terms of the future of investing, is the debate that it sparked around what constitutes market manipulation. I mean, did WallStreetBets and Reddit manipulate the market? And if so, how is what they did any different to what Wall Street and big institutional investors do on a regular basis? And then there are the brokerage services. Did RobinHood manipulate the market when it prevented its users from being able to buy new shares in GameStop?
Stop right there, criminal scum!
With Joe Biden's office, the Security and Exchanges Commission, and the House Financial Services Committee all looking into it, I'm sure we'll get some answers soon.
Could you just answer yes or no?
We always felt comfortable.
I don't have time. I just need a yes or no answer.
I was born in Bulgaria, a country with a financial system
Today,
that was on the
But it's whether those answers and the recommendations that will come from them change how retail investors, institutional investors, or both interact with and participate in the markets that will be key.
It's alarming how little we know about the inner workings of the market. And I am thankful that this committee is examining what happened. I also want to say that I support retail investors' right to invest in what they want, when they want.
But I think the biggest change is just how many people have become interested in investing or the investment world because of this whole saga. I mean, WallStreetBets alone gained 9 million new members in just a little over a month, for better or worse. And yeah, look, a lot of those new members have just put money into GameStop, which at this point isn't investing. It's speculating, it's gambling, it's strapping yourself to a homemade rocket in the hopes of blasting off. But hey, whatever you think of these degenerates, or WallStreetBets for that matter, you can't deny that they haven't shaken things up a little. Do I think you should get your stock picks or investing advice from there? God no. Have you been listening to anything that I've been saying? With that said, I do think it serves as an entry point. And it's my hope that when this is all said and done and the excitement dies down, that a lot of these fresh-faced investors do stick around and take the time to learn more. Because investing can be a fantastic tool, especially when you take the time to learn how to use it. But you don't have to take my word for it. Instead, take it from the guy that managed to turn a $50,000 investment into almost 50 million.
I'm just an individual whose investment in GameStop and posts on social media were based upon my own research and analysis.
That's it for today. But if you made it this far, I appreciate it and I appreciate you. If you liked this video, why not leave a like? Or subscribe to make sure you're notified when the next one comes out. If there's something you want to see me talk about in a future video, let me know down in the comments. Otherwise, I'll see you in the next one. The 10